If rising mortgage interest rates weren't bad enough, homeowners insurance premiums have been increasing as well, making it more difficult to make purchasing a home affordable. As many of you are aware, big names such as State Farm and Allstate Insurance are no longer selling new home insurance policies in California because of wildfire risk and an increase in construction costs. Currently, Farmers Insurance is issuing only a limited number of new policies. And although there are still several insurance companies offering homeowners coverage, there is still a lot of uncertainty in the insurance market. After listening to a couple of real estate experts last week about the current state of the insurance industry, there are three takeaways that I noted that you may want to consider when negotiating offers. One, give your insurance broker time to search for the best quote. What may have taken a matter of minutes may now take 1 or 2 weeks to get the best quote. Two, be realistic about the closing date you negotiate. If you don't close on time, the buyer may be stuck with a higher premium. For example, if your escrow is scheduled to close at the end of the month, but escrow is extended through the next month, the insurance company may rewrite the policy if you don't close the month you told them it was going to close. And three, be ready to show proof of upgrades to a home. You may be aware that getting decent insurance quote for an older home that has not been upgraded is very difficult. If you are representing the seller, be proactive by obtaining evidence of upgrades ahead of time, such as permits. Remember, many city halls are closed on Fridays, and because of Murphy's Law, you may be asked for copies of permits late Thursday afternoon, and now you're going to lose 3 days just to investigate if there are any permits filed. Now, listen carefully. If you are representing a buyer, you should be very careful not to remove unintentionally the buyer's contingency removal for obtaining insurance. This can possibly happen if the seller's agent is trying to get the buyer to do their inspections right away and negotiates for a shorter investigation contingency, which is listed on paragraph L3 on page 2 of the RPA. What you need to remember is that the investigation contingency not only covers the buyer's inspections, but also anything else that the buyer needs to investigate, such as the insurability of the property. Now, if your investigation contingency is running out and your buyer has not found an affordable insurance policy, you do have the option to remove the entire investigation contingency except fire insurance. Let's take a look at the new buyer contingency removal form released in June of 2023. In paragraph 2C, the investigation contingency is broken down into different parts depending on what exactly the buyer is going to remove. In paragraph 2C4, you can see that the buyer can remove the entire investigation contingency except fire insurance and, in addition, flood insurance. Now, if your buyer finds insurance that makes their monthly payment unaffordable, shouldn't that be covered under the loan contingency? Well, let's see what the RPA says about that. In paragraph 8A2, under loan contingency, it states buyer's ability to obtain insurance for their property, including fire insurance, is part of buyer's investigation of property contingency. Failure of buyer to obtain insurance may justify cancellation based on the investigation contingency, but not the loan contingency. So if you thought obtaining insurance was covered under the loan contingency, you have been incorrect. Remember, the ability to obtain insurance is covered under the investigation contingency. Now, if you like a quick overview of the buyer's contingencies on the RPA, check out my YouTube video named The 5 Standard Contingency Removals on the RPA. I'll see you on the next one.